So I was explaining the income. We say income is the specific source of income which is taxable under section 3 of the income tax. So a business can be operated as a corporation, sole proprietor, and partnership. So when it comes to the corporation, we tax the business as its own. Even then, and then when it comes to the sole proprietorship and or partnership, the taxable profit, we don't tax on the partnership itself, but we apportion to the partners by appropriation account, and then now we tax the partnership profit as an individual, which we will subject to graduated scale rate, which I do remember. You remember the graduated scale rate, that is for 10%, 25%, 30, 32, and 35.
Yes.
So, yes. And then now, remember in business, when you generate an income, which means there is an expenditure which you incur generating that income. So we have to see whether those expenses are allowable for you to claim or not allowable for you to claim. So we have disallowable expense and non-allowable expense. Non-allowable expense. So when we say disallowable expense, which is this one, is any expenditure you incur by generating an income. If you incur 20 shilling by generating an income of 100 shilling, then that one is allowable expense. But now we have other disallowable expense which we don't incur. So we have a list here, sample list of allowable expense. Number one is a specific trade bad debt. If you have a bad debt, which is a specific, we know exactly this is customer X who has not paid us. And then you decided to write off at the end of the year. Then that one will be allowed as allowable expense. But if you generalize as general bad debt, then it will not be allowed for claiming as an expense. Another allowable expense is the capital allowance. So the taxmans call it the capital allowance, but the accountants call it depreciation. So you'll have to look at the list of your assets, and then we subject to a capital allowance, which we only have two rates now. We only have 25% and 10%. So the previous, we had around four classes, but now we have two classes, which is of 25% and 10%. The reason why the tax man here is using the capital allowance because of what? The standard. That 25% will be charged across all the business, even the 10%. Unlike depreciation, where most companies, they use straight line basis, they use reducing basis. So you see, there will be no uniformity of calculating the depreciation. Also, another one, expenditure, which is allowed for the claiming as an expense, is subscription to trade association. We have the legal fee or the legal cost. The legal cost also is subject to certain condition. So we have been told the legal cost in connection with the acquisition of a lease of not more than 99 years. So you'll have to be keen to check whether it is more than 99 years. So that is the limitation we have for legal fee. Then we have the interest on loan for the business development. So that is allowable. Marketing, it's also allowable. Loss brought forward from the previous year within the limit of 4 years. It's also allowable. And then legal fee, we have said that. Cost incurred for prevention of soil erosion to be, it is for farming. And then scientific research related to the business. So those are the samples list of allowable expense. Allowable expense. Then we have disallowable expense. Disallowable expense, they are expense not wholly or exclusively incurred on day-to-day operating income generating. So these are expenditure now, which accountants has claimed as expenses, but it is not directly involved in generating the business income. That's why we are disallowing it. So the first one is capital acquisition on non-current assets, and then depreciation, impairment, and amortization. So depreciation on the other side here is replaced by the capital allowance. And then we have the personal and private expense. So most of the expenses, like for directors' expenses, they are not allowed to claim it as an expense when preparing the income statement. General provision of bad debt, but specific is allowed. We have said that. So if you see the general, then that one is disallowed. And then all the provision, because the provision is not something that we have incurred. We are just, it is an assumption. So that's why it is regarded as disallowable deduction. And then any taxes which you paid, like you paid VAT, the income tax, withholding tax, all those tax, you are not paying it so that you can generate another income. No, it is just outside the business income generation. So we'll have to disallow all the taxes which the company pays. And then we also have legal fee and other provision of capital nature in relation to borrowing. Valuation of corporate and also preparation of partnership deed. And we have another one, capital repair, including cost of extension and replacement, and also fines and penalties. So if we have any penalties, then it will be disallowable expense. So we have another criteria here, like donation. We've been told donation are not allowable except in the following situation. So donation, it is not allowable, or gift, but now it is subject to certain condition. If you are donating to the charitable organization, which charitable organization is non-profit making organization, so then it will be allowed for taxation or to reduce your tax liability. Another point is where the taxpayer provide evidence of donation payment. Yes, so it has to be a specific. It has to be a specific or the evidence. For example, most companies, they at the end of the year or every month, they contribute certain amount to schools. So if it is a specific and we have the evidence, then it will be subject to allowable deduction. And then a donation provided can be quantified into monetary term. Yes, like you gifted a person a car, so then it can be easily converted into a monetary value. And then also the donor cannot claim a refund. If you're giving out a donation, but you cannot claim it, you cannot, or you are not expecting to be paid back, then it will be allowable expenses. We have also another one. If the donor is not benefiting in any way in a monetary term, So those are the sum of the example of allowable and disallowable expense. So basically in this taxation of income tax of a business, we'll be interrogating the one transaction by each transaction so that we see whether it is relating to the generation of an income or not. And then we have other specified specified income, like employment income, property income, royalties. So these are other incomes which the examiner will provide to you. So let's see our past paper, if we can get one of the illustration. So this is partnership. Let's have this, the first one here. Can do this one. So remember, for taxation, if it is a manufacturing, if it is another business, so they it remain the same. So let's have it is the same. The way you prepare the income statement for the other one and also this one, they are all the same. They are all the same. So vile tulikuwa tunaitengeneza an income statement ya kwa financial accounting, it is also the same here. It is also the same. So like a sampled format of preparing adjusted taxable income, adjusted taxable income. So examiner will give you two ways. So you can start by preparing the income statement. You can start by preparing the income statement. It depends with the examiner. Income statement, which you will take the sales. You will take the sales. And then you less allowable expense. You less allowable expense only. So once you have you less the allowable expense, and then you add others.
Mwalimu,
Yes, you cannot.
we can't see what you're doing.
Let me share again. Are you able to see now?
Yes, yes.
Collins.
Yeah, naona but sina hiyo questions papers.
Oh, save these. Sijui email yako inakujanga ama
Email yangu ni hiyo hiyo, hata zile notes hata sijapata bado.
nimeshatuma mpaka video. Sijui maybe wa email sasa itabidi confirm. Faith, ulipata videos ama bado hujacheck?
Nilipata. Yeah.
So Collins,
Umetuma leo ama jana? I mean that day ama jana?
I think ni jana ama juzi. But I think tu nimetuma.
Sikuziona, pengine
So maybe this is
kwa nyingine ya Gmail.
Taangalia nimetuma kwa Gmail. So tukimaliza maybe tutabidi tuangalie your email. So now say it for you to get to prepare this income statement, you can decide to start with the sales.
Mwalimu,
Yes.
unaweza nitumia and then I forward it to him through WhatsApp.
Okay, let me show. So nimetuma hiyo past paper, check your email. So we said for income tax, you take the sales and then there's only allowable expense, and then you add back or you add other specified, you add other specified income, farming, rentals. So once you add this, you will get a taxable, adjusted taxable income here. Taxable income. Let the taxable income. So now for the company, the taxable income, for us to get the tax, we only take 30%. We only take 30%. We only take 30%. So you can't, if examiner has given you all the data, sales, purchases, all that, then you will do it in this format. But another examiner will give you the net profit. Another examiner will give you the net profit or the net loss. If you have the net profit or the net loss, then you have to do adjustment. You'll say add, you will add back disallowable expenses. You will add back disallowable expenses. And then you less allowable expenses. You less allowable expenses. You less allowable expenses for you to arrive at adjusted taxable income. Adjusted taxable income. And if there is any other specified income, we also add taxable income. So from there now we take 30% of that. So we have two options. So you'll have to look at what the examiner has provided you, then you will see. So let's see this question, and then we see which approach are we going to use. I think it should have enable multiple sharing so that nikiswitch hapa na pale. Okay, fine. Our question. So are we able to see this question? So we have been told that the following information has been extracted from the books of accounts of UNICEF Limited, a supplier office equipment for the year ended at 1st December 2023. This is the question of last sitting, December. Question question 5C. Question 5C. Question 5C. So we have been told that we have a trading profit before tax. Trading profit before tax. So I hope you have seen this. Examiner has given you trading profit before tax, and then investment income, rental income from the commercial properties, leasing of a photocopying machine, and then you have been given the expenditure here. You've been given the expenditure that the following expenses were deducted in arriving at the trading profit before tax. So the examiner has given you the net profit before tax. So our approach will be the second approach, this one. We'll start with that profit and then we add back this allowable expense. We less allowable expense for us to arrive at the taxable income, because it depends with the nature of the question. And then now we have been given the expenditure which they deducted: salaries and wages, contribution to retirement, depreciation, bank interest, estimate bad debt, and then 5% of the total at the end of the year, legal fee, repairs, miscellaneous, donation, installment tax paid. They also paid the installment tax. And then salaries and wages comprise of directors emolument of 3 million. Also, we have the servant 4.4, another staff 5. So that is a breakdown of our salary year 14. I think uni salaries here 1.4. So is it that maybe the other salaries? Yes, there is this one and the other salaries. Now, bank interest include that an overdraft taken by the senior manager of 400,000 and a mortgage interest of a director of 600,000, legal fees, recovery of bad debt, and then renewal of a lease, 100 years, tax and penalties, tax consultant fee, director's loan collection. So we have to analyze each and every item here. Miscellaneous expend donation toward the political campaign, investment comprise of this. Okay. So I think we'll have now to do it as we take each and every expenditure. So we will start by writing the name of this company. UNICEF, I will put here. So you write UNICEF taxable income. Taxable income for the year. The year ended. We are closing this year on when? That 1st December 2023. For the year ended. That 1st December 2023. So we will take the reported profit. Reported profit. Reported profit. Reported profit of this one. Can we use all the zeros? Let's use all the zeros so that we don't get confused with other zeros. So we'll use all the zeros, the profit, reported profit. That is our value of the reported profit. And then we say, because this profit, it include, they subtracted the disallowable expenses, allowable expenses, so it's a kind of a mixture of expenditure. So we'll say add back disallowable expense. So then let's go now expense one by one. This one, investment, that is an income. Rental, that is an income. This one also is an income. So that one will come under other specified income. So let's go to the expenses. Number one, salaries and wages of 1.4. These one, salaries and wages, we say it, when it comes to expenditure, we have to charge whether it is relating to the what? Generation of a business income. Employees involved in doing the sales, production, and all that. So it means it is allowable expense since you pay this one for employees to generate for you certain income. So it is allowable. It is allowable, but we need to see note number 2. Salaries and wages comprise of directors' emolument of 300,000. Salaries to directors, salary to director domestic servant of 1.4, and salaries to other staff of 5 million. But this, if you see, this value is 5 plus 3, 8 plus this one, and then we have so director's emolument. This one is not relating to generation of a business income. The examiner is saying, yeah, wages comprise of directors, and yet there it is 1.4. So first we'll have to put for other staff, salaries to other staffs, 5 million, and also for 14.4. But here you go with your assumption. If this director's emolument is for a full-time director, then it means it's also director incur that expense in generating that business income. But if these wages is for an executive director, that the taxman might be intervened. So, but in this case, if it is a full-time director, because we have not been told here, then we can take it as allowable expense. So we will take for salary 3 million, 1.4, and 5. So we'll come here. That one is allowable expense. So we will subtract that. I think we can't put here so that to see Rudie allowable expense. So salaries, which will take 3 million plus 1.4 plus 5 million plus 5 million. Hiyo itakuja ngapi? Mko na calculator? That is 8 million, 9.4. So we'll have 9.4 million. 9.4 million, yes, as allowable expense. That is for salary. And then contribution to a retirement fund. Contribution to a retirement fund. Contribution to a retirement fund. So contribution to a retirement fund, this one we disallowed this one. We disallowed this one because do we really incur that contribution in generating the business income? So that one we disallowed because it is subject and also it is subject to pay. So we add back contributions to business, contributions to pension fund, contributions to pension fund, and then we go to the next. Depreciation. Remember we said depreciation is disallowed expense. Instead, we charge the capital allowance. So we also disallowed the depreciation. So you add back that. And then we go to the bank interest. Bank interest is bank interest. Maybe you borrow some money to buy product and then you will be charged an interest. And then that one is allowable expenses, but so long as you can provide the evidence. So this one, it is allowed expense, bank interest. bank interest we allowed. Then to go to the estimated bad debt. Bad debt of 5% of the total debt at the end of the year was given as this. We said for the bad debt, we only allow the specific bad debt. But this one, it is a general because we have not been told the specific bad debt. So we said for the